All right. Welcome, ladies and gentlemen, to the Coin Republic podcast. DAO, okay, decentralized autonomous organizations. These are controversial figures in the Web3 domain, and today we are trying to have somebody who will, clarify some of the stigmas attached to a DAO, as well as trying to establish what a lot of people claim the basics of, Web3 company, the bridge between digital assets and RWA, real world assets. We have with us the founder and chairman of Swiss Asset DAO, which in the name itself, it's from Switzerland, in the heartland, the crypto valley of Switzerland, Zug. I have with myself, with the one and only Mr. Anton Golub. Welcome to the screen, sir.
Awesome. Thank you very much. It's a pleasure to be on your show. Really glad, and really thank you for inviting me. And I love your introduction and framing the discussion today. I think we're going to talk about amazing things, DAOs and real world assets. And I couldn't be more happier to be on your show. Thanks a lot for inviting me. Really appreciate it.
Likewise, people ought to think. I mean, you're from Switzerland. I mean, you're the fifth person I've interviewed from Zug. Are you from Zug? Where are you at the moment?
In Zurich, actually, which is a bigger city, but like 20 minutes away by train from Zug. So it's very close altogether. Yeah, part of the Crypto Valley.
Yeah, part of the Crypto Valley. So there's something about Switzerland that makes it different. I've had a lot of people interviewed from that part. So what makes it different? Why is Switzerland different? It already has those banking infrastructures embedded in them, in their blood. There's something different in their water or something. I want you to define it.
So what makes Switzerland an ideal place to build your crypto company is actually 2 points. First one is actually an understanding where the opportunity for Switzerland lies. And the second point is the history and the track record of innovation. And I will start with the second point to explain it first. Not a lot of people know, for instance, that the internet was created in Switzerland. So imagine that one of the most revolutionary things that happened in the world in the last decades, but actually probably in the whole history, was actually started at an institute called CERN, close to Geneva, where today they collide atoms there and do amazing, experiments. But the World Wide Web started there. So imagine that internet actually started in Switzerland. And Switzerland, it's not a coincidence, actually, because it has the infrastructure, the people, the support, the processes, and kind of the mentality, actually, of trying out very new innovative things. And then being very lucky kind of to be on the right path when it kind of take a look at that. And crypto in that context is actually the same, where people actually, when they take a look at the cryptocurrency or the crypto industry, even though Switzerland has a highly developed banking sector, the people in Switzerland, and I also want to talk about that on a governmental level and regulatory level, see this as a massive opportunity. So unlike, a lot of people see this as a huge threat, if you kind of a little bit thinking a little bit long term, and if you're a bit smarter, then you realize this is a massive opportunity. And Switzerland is a small country. It cannot compete with US. It cannot compete with China, with India. It has to find its way in a specific way, and it does that to technology. Now, when it comes to the first point, something amazing happened back in 2014, actually in Switzerland, is when the whole crypto industry was kind of starting and crypto was globally kind of trying to find its place. The Swiss regulator was very smart, actually, by clearly defining that it sees Bitcoin, Litecoin, and then later on Ethereum, when it kind of came out, as payment instruments. And that was a groundbreaking moment because it clearly defined everyone how to treat cryptocurrencies and service providers who deal with crypto. Because, if you're dealing with a payment instrument, it means like Bitcoin is the same as yen or euro or Indian rupee or Chinese renminbi. Yeah? So it's like clearly defines it. And then everybody knows what they need to do. And this was a groundbreaking moment because it kind of opened the path for the growth of the crypto valley. And kind of the crypto valley took that opportunity, never looked back. And today it's one of the biggest and the most important crypto hubs in the world.
Agreed. Agreed. Let's talk about Swiss Asset DAO because you founded it. So, what are the stylized challenges that you've identified in almost a decade of tokenizing real world assets? And how does Swiss Asset DAO aim to overcome them?
So in terms of Swiss DAO, just to say kind of very in one sentence, kind of explain what we do is we are building a Web3 securitization platform that will enable the DAO ecosystem to invest into real world assets. That's basically one laner explain. So it's basically a platform where a DAO can come in and they click a button and then they ship their cryptos or their stable coins into a real world asset investment opportunity like US Treasuries. So these are kind of the rails that were built. The question is like, why are we doing that? Why is that our goal? And there are actually 2 points around it. First is actually something very important why real world assets today are highly attractive is because of 2 points. First point is actually that the yield today that you can get in the crypto world is effectively zero. You had service providers like BlockFi, Gemini, Genesis, Voyager, Celsius. I think you recognize it. These are all bankrupt companies today that a year ago would promise you high yield on your cryptos and your stablecoins. They all bankrupted because they were offering unsustainable yield or they were outright scams, basically. So the yield in the crypto world is zero. Now, something happened in the real world that was unrelated to crypto industry is that the central banks raised interest rates. So the US central bank raised the interest rate from 0 to 5.5%. So that means US government bonds today yield 5%. Same like what BlockFi was offering you a year ago on your stablecoins. So that means the timing is right because these real world assets are now actually highly attractive. They make sense, like. And then the question is, but Anton, why are you focusing on the DAO ecosystem? Why don't you focus on institutional investors? Why don't you focus on the banks? First, the institutional investors are not coming. They're not looking at real world assets. They're not touching them. They're not the target client segment. But why are we looking at DAOs? Because institutional investors today can actually buy what we call real world assets by opening a securities account with Goldman Sachs, and they can do that as razor sharp fees. And a crypto company like Swiss Asset DAO cannot enable them to do that because we would be basically just an added fee layer with no added value. But then the question is, why DAOs then? Why do we focus on DAOs? Not a lot of people know that today you have more than 12,000 DAOs. I mean, Saurav, imagine this, 12,000 DAOs, and it's a rapidly growing number. And in the future, we imagine that every crypto project will be a DAO. And talking about how much capital do DAOs have, how big is their chunk that they can invest into real world assets, they're managing more than 18 billion. So this is a massive number, actually.
Cool.
So what Swiss Asset DAO is trying to do is, talk to these 12,000 DAOs, tell them you have 18 billion of assets. You cannot deploy them in the crypto worlds because it's too risky and it's all scams. Deploy them in real world assets where we have a yield of 6% on highly liquid, safe US Treasuries.
Cool. Now, you yourself have written a lot of paper from intrinsic time and institutional volatility. You're a finance genius of some sort. If you have to design a valuation method for crypto, what major parameters will you take, and how would you approach it?
Yeah. So in terms of the valuation, for instance, if you talk about value in Bitcoin, let's take it as a very specific example, actually. Unlike most of the other asset classes, it has actually two drivers or two factors. One is actually what kind of return you can get from it, for instance, by participating in the Bitcoin network. But the second one, which is extremely important, is the market demand. Because Bitcoin, the number of Bitcoin is actually finite. So, for instance, a lot of other, asset classes, if you talk about real estate, you would say, well, what's the yield on that, But that's pretty much it because you can build more real estate or there's the demand, so on. But you can kind of in the sense of seeing Bitcoin as an asset class, today many see it as actually as digital gold. And I think that's pretty much a predominant, value thinking when you're approaching a valuation of Bitcoin. But I think in terms of I think for most people, when we talk about generating a return from the Bitcoin network, that's in the context of mining. Mining is actually in the end kind of highly dependent on price and on the emission, because we're approaching the halving very soon, right? So next year, we will actually have a halving moment where the Bitcoin reward for miners will be actually cut in half, right? So that you'll be having less actually Bitcoin that you'll be mining, But this is highly, the mining reward is highly dependent on the price, because if the price goes down, mining is completely unprofitable. Actually, it doesn't make sense, right? Because of the electricity cost. So that's why today a lot of people are really, when they talk about the valuation of Bitcoin specifically, they talk a lot about the demand, because the supply is finite, it's 21 million, and even that out of that 21 million, a lot of it's lost or it's stuck somewhere. For instance, Satoshi's wallet, we don't anticipate it ever to be unlocked. Cool. So it's less than 21 for all the other cryptocurrencies. For instance, Ethereum is a global computer. That's kind of how a lot of people envision it, and all the other protocols are very good because of their characteristics. So these are kind of high level how I think about it.
Cool. Now, in the context of high frequency trading in the cryptocurrency market, how do you optimize your algorithms to account for market fragmentation, latency issues, and other book depth across multiple exchanges?
So first, when we talk about the crypto world, actually, and drawing on my experience being a high-frequency trading in traditional finance, I really want to point out that the crypto world is extremely, extremely different, actually, than what you would find in the equities markets, but even very different than what you would find, for instance, in the FX markets, where I also was a trader, actually. And something highly specific for crypto industry is that it has a massive number of crypto exchanges. So today there are more than 300 crypto exchanges. I mean, can you imagine that? Actually 300, And there's a huge over-the-counter market. So, and if I would have to kind of balance it, I would say over-the-counter market is half, on exchange market, when you trade on the exchanges, is also half, so 50-50% split. And one thing actually that also characterizes the Bitcoin markets a lot, that impact on latency and how you actually build algorithms, is the fact that most of these crypto exchanges were not built originally as exchanges by people who have experience doing that. They were built by full stack developers who are in many cases building, systems and infrastructure if you are building a website, or, not really something highly latency sensitive. And that means today actually that there's a lot of latency when you connect to all of these different APIs in the crypto space, which are all non-standardized. So unlike in the traditional finance where it's all standardized, in the crypto space it's highly non-standardized. And a lot of these crypto exchanges were not meant or not optimized for high frequency trading. Now, a lot of the exchanges try to mitigate that by giving special access rights to high frequency traders, to market makers, to proprietary trading firms. So everybody who does a lot of volume, and they kind of have an unfair advantage. And this would never be allowed in the regulated world. Like if you have an access to an exchange, everybody has the same rights. And it's not like, exchange knows you a bit better, so they give you a faster access than me because they don't know me or I don't know the right people. So in terms of optimization and latency and high frequency trading, it's very challenging space out there in the crypto world because of non-standardization, massive fragmentation, because you have a lot of exchanges, and the fact that these were just not built as professional exchanges.
Cool. Governance is a keyword that is repeated quite a lot when it comes to DAOs. So my question would be, what measures and best practices does Swiss Asset DAO employ to ensure the security and the integrity of its governance process and assets?
Yes. So first, when we talk about how Swiss Asset DAO is structured, we really wanted to make sure that Swiss Asset DAO is legal, in a sense that we create a very clear legal entity in Switzerland that nicely matches or perfectly matches what you would imagine in a DAO, and that's decentralized governance, that each member has a vote. And we were doing research how to structure Swiss Asset DAO, something very specific pops out very quickly in something called a Swiss association, or in German a Verein, where each member of an association has a vote, and with that vote, they can determine how the association, in which direction it's going, key decisions and everything else that you can imagine, So when we looked at the DAOs and decentralized governance and having members of a DAO, we found a legal structure that perfectly matches that too. So this is kind of was very important for us, because first we want to keep the principles of decentralization and be in the on-chain world, so be in the world where you on-chain with smart contracts, but it has to match with a legal entity we have in the real world, and that was our Swiss association. And once we did that, actually, then we went and addressed a really key challenge, is to keep our community engaged. Because if the members are not engaged, it doesn't matter if you have members, right? So really, something, which was a lot of work. I have to say, managing a community is a lot of work. And putting a lot of effort, in my free time, a lot of effort. But, even if I talk that it's very difficult and it takes a lot of effort, the upside that we get from having engaged members is phenomenal. And we have an amazing smart people as members. And that's what Swisasa DAO makes us unique and what will make us a success story, the quality members that we have in Swisasa DAO.
You talked about community. Let's talk about your investors. Diversification of investors is a key promise of merging digital assets and real world assets. So how does Swiss Asset DAO plan to enable this diversification while ensuring safety and reliability in transaction?
Yeah. So in terms of offering diversified investment opportunities, first of all, I have to say is actually that we put a lot of effort there in the context of education. Because when we talk to the DAO ecosystem and we tell them there's an opportunity within the real world assets, what we learn very quickly is that they like simple products. For instance, they like government bonds, US government bonds. But then we tell them, but look, this is a very narrow segment actually, and highly dependent on the interest rates. So if the interest rates go down, all of this, government bonds will yield less return. So you will end up with no return very quickly if the central bank decides to lower the interest rate. So what we actually now are experiencing is that we need to put a lot of effort to educate the DAO ecosystem that there are real-world asset investment opportunities beyond the narrow and simple space of government bonds. So we educate them about private equity opportunities, real estate portfolios, tokenized art, for instance, tokenized luxury cars. So you have to explain to them that there's a spectrum of these opportunities. Obviously, they all have their different risk and return profile, but what we really need to actually explain to the ecosystem, crypto ecosystem, that since the focus at the moment in the whole industry is on government bonds, specifically US government bonds, that very quickly we need to educate the ecosystem about other investment opportunities, because that will bring diversified risk return profile to them. And it's a challenge because at the same time, you want to offer people what they want. So if they want US government bonds, you want to offer them that, but at the same time, you tell them, guys, you need to look beyond that because it might become unsustainable, or it might be just too much concentrated risk within one asset class. So it's very key, education, talking to people and explaining to them, what is out there in the real world, and the opportunities are amazing, to be honest.
Cool. So in that context, how do you plan to navigate and comply with evolving legal and regulatory requirements as they pertain to digital assets and real world assets as well?
Yeah. So in terms of the regulatory landscape, on our side, there are actually two opportunities, but also challenges, if you want to look at it like that, is that when you offer, let's say, very clearly tokenized real world assets, it's very clear those are financial securities. So if you tokenize US government bond, that token is clearly a financial security. And there's not a lot of arguments about it, actually. And in that context, then it's very important, the concept of distribution, or in plain language, to whom can I sell this? That's what distribution is, to whom I can sell this financial security. And then you very quickly realize, kind of if you go around the world, that it's very difficult to offer these products to retail. You have to be highly, highly regulated to offer it to retail investors, actually, or even the products can be very restricted if you want to sell to retail. So as a first step, on our side, it's very clear that we need to, at the beginning, start with professional institutional entities to offer them, to distribute them those assets, or with or entities with professional treasuries. So kind of put them within that bucket where it's actually very easier, not easy, but easier to offer investment products, investment opportunities on a reverse solicitation basis. So this is the first point. The second point is because we target DAOs, we have to work with legal entities. So we cannot work with somebody who says, I'm a DAO, it's a group of people, we have some money, I don't know where the money came from, but here you go, I want to give it to you and invest it in some real world assets. So we cannot work in that way. So we have to work with entities that have a legal structure for their benefit, actually, because legal structure give you benefits and limit liabilities and enable you to work with partners, actually. And it's very key, that we have this principle and a clear standard of working with legal entities or DAOs that have a legal entity. And if they don't have a legal entity, because we ourselves are a DAO, we can help them help them create a legal entity and provide them a legal framework so that they can benefit from exposure to real world assets.
Cool. One of the final questions I got to ask, looking ahead, what do you see as the most exciting and promising areas of development or innovation in the Web3 space? NFTs, they're thought to be the next big thing. Now people saying that it's a bubble. So what next? What do you think it's in mind? Is it DAO, as you said?
So what I can tell you definitely when I talk to people and I tell them about Swiss as a DAO, mentioning the word DAO and real world assets creates a lot of excitement. You can literally see the people's eyes getting bigger. So there's a lot of hype about it. But we talked a lot about DAOs and real world assets, so we'll not kind of dive into details about that. But maybe let's talk about other things that are very exciting. I think a very exciting space within the crypto industry is decentralized social networks. Today, social networks rule our lives. I mean, a social network knows more about me than my parents probably, or my friends and everybody. So we use them. Actually, we use those social media platforms, but they have such power. They know us inside out. And not only that, they sell our data to everybody who wants to pay. And there are, so this is such a high risk, actually. And if something doesn't go as planned, they can block me, take away my whole life. All of my contacts, all of my friends, business partners are gone because the social network says I cut you off because of whatever reason. And I think this is a perfect opportunity for decentralization, in a sense, giving back power to the users. So having a wallet with which I connect to a social media platform, and all the data there that I have, it's within my wallet, and just the social media platform has, can kind of connect me with other participants, but not own my data. And then even more important, if a social media platform wants to monetize my data, which they all do, they make money on our data, it's very clear, I should be remunerated. And in that context, I'm very excited about something called Lens Protocol, which is founded by, go ahead, sorry.
No, so like ODC and other dApps, like social, like DeSoFi, the decentralized version of Twitter. You're mentioning these platforms.
Yes.
Correct?
Yes, absolutely. And there, the most popular on a protocol level, the most popular project that is doing that, something called Lens Protocol. Lens Protocol is famous because the founder of Lens is the founder of Aave, Stani. Aave is the most famous DeFi borrowing and lending platform. The founder of Aave has built Lens Protocol, and on top of Lens Protocol, you have kind of it's an app called Orb, which is very similar, kind of like Twitter. You have your LensTube, which is kind of like YouTube, and so on. So they have this like very interesting products, but at each point you have a wallet. You plug into the Lens Protocol. Lens Protocol then hooks you up with all of these decentralized apps, and social apps, and then you can you have your data, you control it, and many times you can be monetized. So I think this is something extremely exciting, and I think the timing is also right, because today people are aware what kind of power these social media platforms have, like Twitter, Facebook, Instagram, LinkedIn. They have such power, and they're making money on us, and we're not making any money back. So let's change that.
I think you're right, because Web 2.0 was the boom of social medias, right? YouTube, Instagram, and all these social media platforms. So the next step for Web 3 would be these decentralized social platforms like ODC and Lens Protocol. You're correct. That's something to look into. Yes. Final question, Mr. Anton. For a man who wears many hats, such as yourself, what advice would you give to people who want to walk on your shoes?
So for people who want to walk in my shoes, let's say kind of when we talk about shoes, let's say there's a left shoe and a right shoe. So first point I want to say, crypto industry is the most exciting industry you can be in. I mean, there is no other industry comparable. People are so cool. Like, you and I connect, we have a great conversation.
Exactly.
So we understand each other. We have the same values. It's so awesome. And the people are amazing. And we really feel like we're saving the world and fighting the old world, So it's really that kind of like great mentality, great vibe, yes. And a big camaraderie. Sorry, I think you said it perfect, camaraderie. So perfect. I really say, come and join. But on the second part, because you kind of mentioned I have founded several companies, founding companies and growing them, I mean, I look fairly happy, but there's a lot. I mean, you know it as well with your show, with your podcast, how difficult it is to scale it and grow it. And I tell to everyone, building streaks, it takes a lot of effort. It's really, you need to love it. You need to love what you're doing, because it's going to be very, very difficult, extremely difficult. But the reward of building something, it's like, seeing your baby grow. So build companies, but no, it's going to be horribly difficult, and be ready for it and enjoy it.
Phenomenal. Ladies and gentlemen, I do have to say before we part, he's very active on LinkedIn. So if you don't know who he is, just copy and paste that name, Anton Gulab, on LinkedIn and just follow him. I'm pretty sure you're going to want to connect with him over there as well. So Mr. Anton, it's an honor to have you on the show, and looking forward to collab in other projects as well. As a media company, we definitely have our eyes on you and want to support what you guys are doing.
Thank you very much, Sarah. It was really a pleasure, and I had a phenomenal time today. So thank you for everything.
Fantastic.